So what separates winning traders from losing traders? This is always a big one, ain't it? So this is why some people fail. Most people fail in trading, and this is all fun and games, but most people will trade anything, in everything. They have a trading strategy that has no like statistical edge, right? They have a trading strategy that has no statistical edge. And statistical edge, like why is that important? Well, if you really think about like trading, like I can see like all my students' trades over here, right? So like, over time, like what you can do is you can build out ideas of like what people are doing right around. So like, for example, like this is a student of mine, he's just started, right? But like we can start like looking at his stuff and using data via trade journals and really start to build out like a statistical thing. So like I can see like, okay, in his last 30 days, and he's a brand new trader, but man, you had a very, very bad day over here. But then the rest of the day is like he's been okay. But beyond that, what I can start to see is like data, right? What's interesting is that for him, and he's a new trader, he's a profitable trader, but he's only really has a 41% win ratio. So if you were playing a game of heads and tails, he actually loses the game of heads and tails. But because his risk management is so good and the way he's managing his trades is so good, like he actually ends up in the profit on these things. And the trade journaling and the data they'll actually show you a big thing. Like, for example, he doesn't trade very low range stocks very well. So like all his losses come from like a very, very specific type of stock. And so this data will tell you like a whole different behavior of what's going on. And so I think that's like one of the fun things that why retail traders, they fail, because they don't have that. Now, another reason that retail traders fail is they don't know why they're losing in the first place. They don't have that awareness. It comes from actually not doing your homework, which is your journaling. Why that's important, right? So they're not doing their journal. So if you're not doing your journaling, then what goes down? You have no awareness of your tendencies. And your tendencies of why you get in trouble is very, very important. And even for myself, like I will put in, all my trades once a month, and I'll start diving into all these things, the same type of deal to see like what's exactly going on. And, I'll have my own tendencies of like what I'm trying to do. Now, like it's same type of deal. Like I could see exactly, right? Inside range, outside range. So like when the market is actually making big days, that's when I usually do well, right? When the market is making this type of move, I usually do well. When the market is doing this, I usually do well. And so these are the type of things that become really, really important when you are looking at trading. And this is where retail people will often fail. Of course, beyond that is like the weak mental toughness of, hey, I'm beating myself up versus looking for improvements. Sometimes like when we lose, and I'm like this too, in the past, is like we take losses and we associate those losses. It's called trader view. Amit, it's called trader view. But, sometimes when we take losses, we associate those losses with like who we are as people. So like when I was like a new trader, if I would lose money, I'd be like, man, I must be a bad person. Or if I was losing money, I would think like, man, I'm a loser, right? Just because I lost in trading doesn't necessarily make me a loser, but that's how you feel at times. And it becomes like this thing that kind of spirals into it. When we're trading, we really have to go in. If you can kind of deduce your trading into patterns and just the math of the journals, the data, and say like, this is it, right? Hey, sometimes these things work, sometimes they don't. These are the probabilities, these are statistics. Then you can kind of take away that willpower part of trading where you're like, am I a good person, bad person? And just go in, hey, this is the data. Also, retail traders fail because they got terrible risk management. And this is like 99% of what I see with like my personal students. if they have $100 gain, I use Trader View, Michael. I know a lot of my students use the Trader Sync. I'm old timer. It's too hard for me to use. I love it, but I just can't figure out how to use it. All the students love it, but I can't do it. And, Josh, he loves it. So then, these are my peoples. But what can I do? I can't figure out how to use it, share anything on it, but it looks fucking fantastic. The Trader Sync, it looks fantastic. It is the best looking trading journal in the world. But for the life of me, I'm 40 years old. I can't figure out where to put anything on the thing. It's an awesome thing for smart people. I'm a blue collar person for the most part. When I say risk management, let me go back to this. This is how I used to be like in 2007 before I went. I'd make $200, $200, $200, $500, $500. Then I'd lose $5,000. That was my personal problem. I could make money like all the time, but the reason I was making money all the time was because if I was right, I would just take the profit, right? I wasn't really letting anything play out. And then if I was wrong, I would just hold it all the way down. And then poof, it'd go. So I would make money every day for weeks. Then all of a sudden it was gone. Big trading ego. Trading ego is actually something that I've seen come about more and more over the last couple of years. 5-6 years. Sometimes people take losses because they don't necessarily care about making money. They care about being right. I need to be proven right. This idea of mine it's personal for them, right? When you start making it personal versus, hey, this trade is about charts. This trade is about data, then you're going to end up losing. And then, of course, the most easy thing, and one of the reasons that people fail all the time, is they spend little to no time preparing. And I think that's hot damn. That's the one that people should be ashamed about. I see this all the time with even my guys. It's like, hey, where's your watch list in the morning? It's like, when we run our chat room and stuff like that, my students put their watch lists. They put their watch lists in the chat room before we start trading. And I look at it and say, hey, this is okay. This is okay. This I have some questions on. And you'd be shocked. I would say these are people that pay thousands of dollars for a class, right? And they're supposed to be pretty damn serious. I would say like over half, no preparation. I was just seeing what everybody else is trading kind of thing. It's like, what? What did you pay me for? Like, what did you pay me for? A lot of times we can get complacent and we don't want to spend the time it takes to actually get going. There's only a few things you can really control. So like when you're thinking about like any end result, whether it's in business or trading, you can control your personal output, right? You can control your morning routines, your nightly routines. You can control how much work you put in, how much planning you put in. And in the end, the things that you can control, if you do it right, then the end result shows up over time. What happens if like you're haphazard, like one day you're pretty gung-ho and you like do all your homework, you do your preparation, and then like a couple of days later, you don't do it. And then the next day you do it. And the next day you don't do it. And you're like super haphazard with that. Well, each day that you miss, it really puts you back at, I wouldn't say zero, but if you miss one day, it puts you back 2 days compared to people that are doing their work every single day. So if you miss one day, it puts you back 2 days. You miss 2 days, it puts you back 4 days. If you miss 3 days in a week, you've lost 2 weeks compared to the people that are like doing their work every single day. Because like when you're actually doing like the stuff that's like even in our program or any kind of charting, we do scanning every day. I'll probably go through 1,000 charts every single day, flipping through different lists, different scans, seeing like what's happening in the markets. So when I do that, like it gives me it gives me a perspective of like what's happening like in the general market. So like every single day, like I'm going through stocks, like seeing like, okay, what are some things that maybe I'm looking for things to trade the next day. But beyond that, what it's telling me is and showing me is like what type of stocks are working, what type of patterns are working. It's like this is a mouthful, right? Like this is a lot going on. But what I do is I'm training my brain to see patterns and what kind of stuff works. And that kind of gets into your head. Like, we're big into these kind of patterns, like which are about very, very tight consolidations. So the more you see stuff like that, hot damn, I missed this today, right? The more you see stuff like that, the better you're going to get at it. But you need to go through like your charts every single day and just do this, because it's going to train your eyes to see like what actually works. What does momentum actually look like? And this is teaching